Hi traders, how's everyone doing? Kevin, Michael, hi, Money, Alexandra, hello. Michael T. Kevin, how are you, buddy? Okay, so Dixie was not able to take out the low. We'll see what happens, on a weekly basis. It's trying, it's a inside week. The off numbers here, so 92.29, so we're trading about 30 above it. I bottom picked it around 35. I've had little intermittent rallies. I'm just going to leave my stop at 91.80 on this. There are a couple of instruments right here that are good or bad from last night's lows. I'd say the yen is at 78.6. So if it could start to turn up here, start closing back over 104.5, that's going to look pretty good. But underneath 78.6, look out. But I give it a chance. And what was unusual is when the yen was under pressure, that gold did not make any hay out of it. And if the yen's going to turn up from here, the gold's in trouble. For those of you that want higher gold, you're going to have to root for a lower yen, US dollar yen. Because when a market doesn't make hay when it should have, while the yen was sliding all week, right? Gold really didn't take advantage of that tailwind. So if markets can't act good in a tailwind, what's going to happen with a headwind, right? If you understand what I'm saying, give me a Y. Okay. And something else that's good or bad from right here is Euro pound. And this rally that we had after they shook out all the longs down here, pulled all the way back to 61.8. It's trying. If we get back over this little down channel here, looks like it's going to come in like around 89.80. And more than that, this wedge line up here comes in around 89.90. If that happens, you have a chance for a decent bull move up to the wedge line, which is coincidentally up here at 92. I know someone that likes that 92 number. So these are good or bad from last night's low, the yen and EG. Okay, Kuldeep, why don't you ask Steve about it in a little while? He's been covering the Turkish lira. We're covering Turkey in November because of Thanksgiving. So Turkey's on our radar. Do you like the drumstick? Okay. This, I think, is significant. That I talked about the off number in NASDAQ was 12,130, and this day it got up to 12,094, missed a 2-week off number by 40. To me, it looks like we have a trend break here. All right. I would sell rips, go a little shorter term. If we had a rally back up towards these lows, or 1940, and S&P's even clearer. I don't know if we're going to be able to, but let me get you guys out of the way for a minute. If you just look at these, this is where we accelerated to the downside yesterday, right here, 35.90-ish. So if we could rally back up to 35.90, I think it's a sale. This could end up being a negative week. Unlike the NASDAQ, where the off number was above the market, in S&Ps, it's underneath the market. and it's this candle's close of 35.17. So, you know, it's doable, right? 35.17 is where we had all these lows here, 35.20. So it's a coinkydink that, you know, that's our off number for this week. Sometimes it'll act as, you know, there might be a bounce from there. But to me, this looks like a rollover as well in S&Ps. I think yesterday was a key day in S&Ps, and you sell rips. And if you're not a futures trader and you're looking for an ETF that's been around for a while, doesn't have a lot of erosion like a lot of the bearish ETFs, take a look at Quid. Okay, so I think it's 2 times. It's not a triple leverage, it's double leverage. But look at this falling wedge that we have here near the bottom, and the divergences that we have here when NASDAQ tried to make a new high a week ago. And, you know, we're still at the bottom of the wedge. So you could like buy 1,000 shares and risk $1. You probably don't even have to risk $1. You risk $1,000. And if we get the kind of action I think is possible in NASDAQ, we should get a breakout over 970. And when you look at it on a daily basis, 12 to 14 is possible on breakout over 970. Your risk isn't bad. Look at the divergence on the daily. It's very glaring. So we've been diverging since September. Okay. And it is a 3 drive. Here's 2. Here's 3. And if you really want a big picture, and this would take, you know, a huge meltdown would be, you know, they're just dots. And on the weekly, look how long. I know you really can't position yourself on weekly, but now we're starting to get, yeah, SQQ, yeah. And anyway, I think they look good. So this moving average comes in at 15. So, you know, just an instrument for those of you where, you know, you can't handle the leverage of NASDAQ. Yeah, S&Ps has micros now, so you don't have to do that. But does NASDAQ have micros? The NASDAQ 100? I know the S&P has a mini and a micro. Not sure about NASDAQ, but yeah, okay. Anyway, this was a close here yesterday. So something to think about if you're bearish to NASDAQ without risking the whole farm. You know, you don't have to risk the farm to be there for a correction. And why can't we correct 15, 20% from here in both S&Ps and NASDAQ? Anyway, I think this trend break is significant. And this, you know, all we did was get to 61.8 here in the NASDAQ. And the S&P was stronger for a while. It got up to 78.6. So I think we're topping in this kind of fashion. And this could be a C. Okay. And I think minimum targets are around 34.5 on this. So I like selling rips for the rest of the week. Let's see how this works out or doesn't work out. Any questions on anything I presented to you guys? You know, our mission is to build up and edify traders every day. We leave it all on the court for you guys. Okay. So we'll see what Blake is thinking here now. Blake actually showed the Dow showing some divergence. The Dow's been outperforming on the chart of the day. Dow's been outperforming NASDAQ and S&Ps on this recent recovery in the market. You know, they're going to things that have been depressed. So what do you think? What's it going to take on that chart of the day, Blake, for it to turn negative?
Hey, Coach, can you hear me?
Hey, got you, buddy.
All right. You know, just, you know, looking at the Dow.
Yeah.
I mean, I mean, I'm trying to look at all the markets together. So it's not just,
Right.
just the Dow, but I mean, I think it's pretty clear that, below that, like 28.8 or so. I mean,
Yeah.
that's a pretty clear, like, oh crap, I got to be real careful with being long again, like
Yeah.
maybe, I guess it's maybe a little bit higher than that. It's 28,900. I
Yeah.
think that's the level where you got to go, okay, maybe it's over near term, you know what I mean?
Right.
And obviously you want to be paying attention to the other markets too, because the S&P is, just kind of dragging lower here, and then, obviously the NASDAQ as well. So but I think that the Dow has kind of gone unnoticed by a lot of people. I think, everybody's focused on the S&P and everybody's
Right.
focused on the NASDAQ, but the Dow, I mean, it clearly shows you that it's struggling up here at the previous all-time high. So and that should be a
I'd see
warning.
what you're seeing here too, Blake, this daily divergence,
Yeah.
4-hour divergence right here at
Yeah.
this high. Yeah.
Yeah.
Okay.
So,
Gaps underneath it. Yeah.
right. I mean, I think there are risks now to this, to this market. And it's, we see, the big caps roll over and some of the other ones be supported, maybe like the Russell or something. Yes, you could, but the big caps are, the biggest companies, basically, not all of the biggest companies, but it's the marquee players in the market.
Right.
So when those are those are under pressure, then then we have to really take notice. So anyway, I was just also tweeting really quick, Dale, is I was just tweeting about what's happening with Trump. And he's, they have a press conference today with attorneys, and the bottom line is he isn't going away. And
Right.
and wait, hold on, I got to tell you, there was hold on.
There's just Trump didn't do anything against Iran, so Israel struck some targets in Syria, Iranian targets.
So hold on. So hold on. There was here we go. In 1876, there was I think that was the election that there was 2 inaugurations happening at the same time. Yes, right here. Okay, so the Hayes and Tilden. So you had 2 concurrent inaugurations happening at the same time.
Wow.
Yeah. So the crazy thing is, I tweeted it, and kind of jokingly, like, we might actually end up having like 2 inauguration ceremonies. We could end up having that, and I'm half joking, but I'm half not. You know what I mean? Like,
no, I don't remember that, Forex gal. I was only a baby. Okay.
I don't know. I thought you were in college back then, Dale.
No, I was,
No,
crawling.
But I'm like I said, I'm half joking, but I'm half not joking. I'm really wondering, because I don't think he's giving up, and I don't think he, and a lot of people believe he shouldn't, and so
70% of Republicans believe it was a fraudulent victory, illegitimate for Joe Biden.
So there you go. So why couldn't there be, two
Yeah.
inauguration ceremonies where, you know, Trump's like, I'm not the loser. And then, you know, Biden's like, you're not the winner. And then we go into a constitutional crisis.
Right.
I
What
don't
was
think
the
market,
outcome of the that one that you're showing between Garfield and Tilden? What ended up happening? Well, Garfield ended up being president.
no, it wasn't Garfield. It was um,
his
Hayes.
opponent. Oh, Hayes, yeah, Hayes.
Tilden.
And
I
Hayes
believe,
and it's similar. Look at that, Blake. He had
yeah,
less popular vote, just like Trump.
yeah,
And he only won the electoral vote by one.
right.
That's a little different, but yeah, he didn't win the popular vote.
So
Huh?
I'm just saying, man. I think that we need to be a little careful, and I'm kind of worried that we might go into some sort of constitutional crisis where we don't know who's president, and I don't know if the markets are going to. I think as we get closer, markets are going to start to get a little worried, especially if Trump doesn't go away, if he doesn't concede. You know, the longer he drags this out, the more it's going to start to weigh on the markets. You know, markets are going to start going, hey, wait a second. And that's why we need to be a little careful with risk. I mean, right. You know, we obviously have the S&P, and I'm just gonna here, grab wrong chart actually. So we obviously have the megaphone pattern, which you guys all know, right?
Yeah.
And right. You know, we're all obviously also putting in a false breakout too, which is a risk. And so if we start, you know, drifting below like 3,500, I think the risk is that the markets start to feel a little bit of heat. And, you know, if the stock market feels a little bit of heat and we start to see a little sell-off come in, then what do you do? You know, what do you do with, what do you do in FX? And my opinion is you have to start, you know, looking at these commodity currencies that look a little vulnerable. One of them's, you know, obviously the Kiwi had a failed breakout attempt. I think we can buy dips to 68 cents, but, you know, it's still above 68 cents. But if we drop below 68 cents, it's over for the Kiwi. And the Aussie looks a little timid here. It's even on a better jobs number overnight. You know, we still saw and it was a really strong Australian jobs number. We saw the Aussie slip, you know, so I think that we have to, like I said, I think we have to be extremely cautious and careful at this point. And we could end up seeing, you know, some dollar strength, especially against some of these commodity currencies, if these presidential risks persist. You know, do I think we're going to get a vaccine? Yes. Do I think we're going to get stimulus eventually? Yes. But that doesn't mean that in the near term we can't get a hiccup, and this is, you know, possibly a hiccup, right? So let's take a look at the S&P, and let's kind of just, you know, put up our bias chart levels. And by the way, Dale, I was just going to ask you, Dale, does what I'm saying, does it make sense a little bit, or, you know?
I didn't know about the historical analog. I find it very interesting.
Yeah, isn't it?
I must have missed class that day, history class.
But that was obviously that was
after the Civil War. That was after.
Yeah,
country's still divided, like now.
Yeah, I mean, it's obviously not in the information age, and I mean, you know, you have people running around thinking they won and I won, and, you know, I mean, you know, who knows? I mean, it's a different day and age. Like today, we should be able to go, okay, the vote was, you know, it was a definitive win, you know, but obviously that's not happening. So, and that's where it gets so like, holy cow, I can't believe we're dealing with this right now type of situation.
No one can. It's surreal.
Right. It is a little surreal. Okay. So we are back in a range after being bullish yesterday and the day before being above 3,600. The move below 3,600 obviously brought on a little bit of selling. So now you can see this previous trend line here. That trend line is going to come in right around, you know, these lows here, which will be 35.15. I think we got to watch that for support. Do I think we're going there today? Probably not. But, you know, could we? Sure. You know, we could. Cable. We're getting a Brexit deal next week. That's what I keep hearing. So we stalled at the 133 level. And, you know, we had Benedict in our chat room and a few other traders. I think Amanda was just shorting the cable yesterday around the 133 level. You know, if you use ForexAnalytix, you know, I actually put in the update right here, the pound dollars at horizontal resistance. A break above would put the 133.65 level in play, but we can never break above. And since then we started sliding. So now we have to mark up that resistance, but also what we should do, get rid of this.
You think there's a one buy stop above yesterday's high?
There might be, but I don't know if we're going to get to it. You know what I mean?
Yeah, I know.
Yeah, this is the 50% retracement. What's that?
Yeah, maybe not immediately, but you know, the algos are probably eyeing that later. You know,
it depends what equities do. I mean, you know, and I mean, if it's absent of any news, Brexit news, yeah, I think it would be a false breakout if it actually got there.
Right, that's what I'm thinking.
Yeah. So I'm going to write down 133.10. Whoops. Support 618 right here. That's also a previous hourly high. You can see it right there. Hourly low right there. 131.80. So that should probably offer us some support on dips. Okay.
Like you put the S&P in the euro dollar column.
I didn't. Oh, I did. Oh my gosh, I did. What was I thinking? Thank you. I'm thinking it's still early in the morning here, and
oh, come on, you get an extra hour's sleep now.
I know I do actually.
It doesn't wash anymore, bro.
That extra hour makes a big difference.
I'm so envious. All right. I'll be
really
back in a minute,
it's my 5 months of bliss.
And it's cool out. I mean, you know, you're in Nirvana now.
Yeah. So sorry. Let's go over to the euro. Okay. So here's the euro. You know, yesterday I was selling the euro in the 118.60s, and I'm still short. It's just we're holding a 50% retracement. I do think that we're going to eventually make it down to, you know, the 117.60, which by the way is the 50% retracement of this. If you don't know, it's a 50% of that move. But we have, you know, obviously some work to do, and the euro is very, very slow moving at the moment. So intraday support will be 118.15. Below that is 118. So I'm more concerned with 118 support because that's the 618 resistance. You know, any move back up now to 118.75 should find sellers. Oops. Okay. Aussie dollar. So like I said, the Aussie, good jobs report, great jobs report, actually. Aussie slipped. So where do we go from here? Well, I think we have to write down the same 73.40. By the way, I had an order to sell. I was waiting for a good jobs number. I thought it was going to be a good jobs number. I had an order to sell at 73.49. I was just hoping it was going to take out the stops above the highs and I was going to short it. Obviously never made it. So now we're just dealing with this is the previous high, the 72.40, but we probably need to pay attention to the 72.20 now. So and we are range bound. Kiwi's still bullish. I think we have an ascending channel now, And so dips to the 68.40 should find support, and 69.50 should be resistance, or 69.40. 68.40. Whoops, 69.40. And Kiwi's still bullish. Do I think that the Kiwi's at risk of pulling back? Yes, I do. That's why I drew this red out here if you haven't seen it. And I know some traders that were in our chat room that was shorting it yesterday. So, and Amanda, she shorted it at 69.35 or something, because this is the 127% extension. This move, and I know I followed her on the short side there with a little, and I know some other traders did too. So it was really nice little move lower from there. Okay, but we'll have to watch, these support levels as we come down towards 68.40, in my opinion. Dollar Canadian. Okay, so the dollar Canadian had a really nice bounce yesterday. We had if you look at the daily candle, we had a pin bar false breakdown that was a clear indication that we were going to bounce, and we have. So now we have to pay attention to 131.20 and definitely 131.75. So I'm going to mark both those areas up. 131.20, 131.75. And I think you got to try to buy dips below, like if we can get a move like yesterday where it's a little false breakdown like you saw here, I think that a move to 130.70, maybe 130.65, that would be great if you can get a move like that, and you might. Okay, so I'm gonna write that down. Okay. Hold on, I got people in the chat room yammering at me that we got data. Oh, we do. We have Canadian data.
2 minutes though, not now.
Yeah, you're slacking. This is big data. You got to actually give me more than just 1 minute.
Whatever.
I mean, Stelios, you just can't do anything right. I mean,
it's my ex-wife used to tell me that.
All right. Let me see. I'm gonna get. I'm a lot prettier than your ex-wife. I'm just telling you. Just saying. Just kidding. Okay. Let's talk Mexican peso really quick for a minute. So the dollar mex, again, holding it. I guess the thing about the dollar Mexican peso is it's holding lows and it's making a higher low, which is good. We might be, carving out a lower high too here, but I think if we can get above like 2050, then we can challenge this 2085. But I'm gonna write down in the dollar Mexican peso 0300 20.84. It's still, and I mean, we should actually really be bearish here. I mean, we really we should, but the thing I'm most worried about, and the reason why we've had it at neutral, is because we did a false breakdown below these lows. So I don't know. This is questionable right here. All right, let's go back to the Canadian with the data. Minute chart. We'll keep it on 1 minute chart. Let's pull up data flash. Okay, here's Bloomberg. Let me make some adjustments here. Whoa. Where am I? ADP right here. So I think this is new. That's why we don't have any historical data on it.
Hey, we were faster.
Yeah, look at that. On jobless claims?
Yep.
And this ADP data,
What ADP? I don't see it.
It's right here. ADP payrolls data. That is new. And the dollar Canadian is...
Oh, the Canadian one, you mean?
Yeah. I know we don't have it on Data Flash, but I saw it in a couple different spots today.
Yeah.
So I think it's new. I think it's a new piece of data, actually.
I've seen it. I think it's been there for a few months. I've seen it before, I'm sure. Philly Fed's still not out. Anyway, not really that it's going to move anything, but...
I'm thinking we can get a move. We could get some Canadian movement if we could figure out what this ADP data is. Nothing yet. Okay.
Just like our friend DJ saying, 742,000 illicit jobless claims. Meh. It's funny how we dismiss, like, practically nearly 1 million of new unemployed people every week. Yeah, it's nothing.
Right. It's,
Yeah.
It's a few 100,000 here or there.
Yeah.
I tended to see more homeless people around my neck of the woods. It's not me, right? For them.
More lately, has it increased, Blake?
Yeah, that's just because the weather is really nice here right now. They all migrate, right?
And yes, I know you were sarcastic, DJ. Don't worry, I know you were. We are as well.
But Dale, just to answer your question, yes, because this is the time of year where we have a lot of homeless people. They make their way to Arizona, to the Phoenix area during this, because they can sleep outside all year long, and it's nice. To an extent, obviously. You know what I mean?
Yeah.
Okay. Something I'm hoping none of us ever have to witness, other than being in a campground. Okay, let's continue on with this analysis. Let's see, and somebody let me know if the data comes out for Canada, if you guys see it, because I'm going to do analysis and I'm not paying attention. So let's take a look at the Swissy. So here's a Swissy. Same as what we've been dealing with, right? 91 cents of support. Resistance now is this trend line. So I know 91.85 is big, but even intraday 91.65 is going to be something. Oops. So we're going to write it down. Not like it's a big deal, but, and I should actually write 90, because I keep writing down 91 cents, but it's actually 90 right here. If you want to be like a little granular on that analysis, and I am paying a little bit more attention to the dollar Swiss nowadays, not because of the dollar Swiss. I'm more paying attention to the euro Swiss, just so you guys know. I'm actually starting to get some feelings about the euro.
Is it kind of a market tell for other things?
Well,
Blake, is that why?
It is. It is, and it was my chart of the day from a couple of days ago. So if you're interested in my thoughts on the euro Swiss, that's there.
Okay.
I'm going to give you guys...
Our friend Ayman is saying minus 79.5 ADP non-farm, minus 240 was expected.
So it did come out?
Less negative, so good.
Let's see here.
I don't see it on investing.com. I don't know if you see it.
I don't know. I don't even see it on Bloomberg.
Anyway, that's what one of our friends is writing.
We have a lot of friends in here today.
Yep. A Forex factory, okay.
God, I would hate to work in a Forex factory. What do you do? Are you in a...
U.S. dollar, Norwegian krona. We held the 896 level. Yesterday we dipped to 898, and we held it, but we're still trading pretty heavy here. So you'd have to get above 920 in order for it to change anything. So 896. Ooh. 920. We're in a range. Making my way down here. We did the S&P. Let's go over to the dollar yen. So the dollar yen, one of the traders in our chat room actually was starting to pick up yesterday. I think Richard was picking up dollar yen below 103.80. Really, really good price. I mean, I know we had this whoops, not that
78.6.
Is this 78.6? But
back to the breakout. Yeah,
we had this trend line here. You know, also.
Yeah.
And so yeah, it's like back to the breakout point, and it's technically it made sense. The dollar yen still just doesn't make any sense to me as a trade. You know, like the guys in my office are very much trading it in a different fashion. It still does. It's not registering with my point of view. So I'm having a difficult time wrapping my mind around why I want to trade the dollar yen, and it really has to be at a key level support or resistance for me to do anything. But that also means that you know, if we get back up here,
could
like
be a sell.
to 104.40, it might be a sell. I don't know why, but it doesn't really matter, right? If it's at resistance and you just want to short it, then so be it. So support's going to be 103.70, resistance 104.40, 103.70. It's just tightening up a little bit. Dollar index, as Dale, you pointed out, didn't make a new low. And actually the dollar index is moving right now a little bit. So I still think that 93.10 is going to be resistance. Support is 92.10. And I think that's what we wrote down yesterday, if I'm not.
Yeah.
If I'm not mistaken, I could go back and find out. Because Stelios is always so good at posting the stuff in our chat room. Here's our chat room, guys. Let's see. These, you can see there's been a lot of talking. This is where I got up. I got up right here. Good morning, everyone. Oh, that's when I mean, in front of the computer with everything turned on. This is how much chatting's gone on since then. Okay. So, as you can see, it's a pretty active community. That's, if you want to be part of this community, make sure you try out ForexAnalytix. So this is yesterday. This is the bias chart. Stelios posted it. Thank you, Stel, by the way. So let's see.
You're welcome.
Oh, here. I wanted to do this. So yesterday, 92.10, 93.10. Yep, that's right what we put in. Okay, so let's take a look at gold. And let me get rid of the chat room.
Metals are getting smashed, by the way.
Ooh, 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 ooh. Have you ever seen the Coming to America?
Yep.
Ooh, ooh, ooh.
One of my best movies. One of the best comedies ever made.
This is so funny. Hey, Steve, good morning. I mean, it's seriously.
Good morning. It's absolutely probably Eddie Murphy's best. If you ask
definitely
me.
was.
No. Trading places. Come on, you can't beat that.
Yeah. As a market person, trading places are good, but I love it. Look, here we are, 1850, getting close. By the way, this is a bear flag pattern. You guys see it, right? Let's make sure everybody sees it. Let me make sure. Let's do this. Ooh, no. I didn't want to do that.
Of course, you do realize that political correctness would never allow such a sin nowadays, right?
Oh no! Oh my gosh! But it is
Not
still,
once in a million.
no, but it's still so funny.
It is.
Okay. So the bear flag, just so you know, points to 117.84. I'm not a big flag person when the flag exceeds the the flag pole, but I think that by more than 50%, like if you look at the daily chart, it barely does. So, you know, I think this is so capable because of how bullish the market is on gold right now. So that's why I think it's actually doable.
You know, that bullishness is not reflected in DSI. I mean, we've been in the 30s, 40s in gold for a long time.
Yeah, you're right. You know,
have you noticed that?
Yeah.
And, you know, and that's made me a little cautious about shorting it because there isn't a lot of bullishness right now. I mean,
sorry, I'm just writing down.
Yeah, people are bullish, but DSI is, you know, what I use for sentiment.
I have an absolutely certain way to avoid shorting precious metals. Whenever I get the urge, I just have a look at central bank's balance sheet, and it immediately goes away.
All right, Steve. Well, hey, good morning, by the way, guys. I'm going to leave you with this, and let me mention that if you really want to be part of the Forex Analytics community, go to the Forex sponsored page, especially if you're not in the U.S. or Canada, and open a Pepperstone account. You have to use this link here. If you open a Pepperstone account, a live trading account, you can get 2 + 2, 2 months free, and then plus 2 months once you trade 5 standard lots, which is very minimal. So try it out, and guys, I'm going to pass it over to you now.
Blake, can you please put up the chart again? I didn't have the time to
bias.
Nope.
Yes, please. Okay.
Oh, here it is. Okay.
Hold on a second. And
he's so lazy.
Thank you.
Smile bias chart.
I got it.
All right.
Thank
you, guys.
Dad joke.
I appreciate you. Have a great one, guys and gals. Blake. I'll see you on the daily roundup webinar, which is for Forex Analytics subscribers. So I'll see you guys in 4 hours time.
Thank you, Blake.
The rest of you, I'll see you tomorrow. All right. See you.
Thank you very much. Thank you.
Bye.
Okay, so Blake mentioned quite a few things. We're still in, unfortunately,
wait. I mentioned quite a few things. Double inauguration. That's the most important thing.
Double inauguration,
okay.
Yes.
Sorry, I'm going to let you guys go. All right, bye.
So we're still in wait and see mode. We wait and see what happens with the US elections. We wait and see for Brexit. Wait and see for COVID vaccines. It's
the name of the game for everything, Stelio.
Yeah, and you know, I'm finding myself doing very little. In fact, I got out of my last bit of Euro Norway short today. This particular piece was actually out of the money, but all the ads I'd done over the past 6-8 months, they've done very well. So overall, it was good. But I'm out of that, so I have very little now. I'm still waiting for silver to get to 21 and a half, somewhere there. It will depend on price action to get long again. And I think that will be a gift if we can get there. And obviously, I'm going to be reshorting Norway pairs on spikes. So risk today, we were a little bit in the beginning of the day, overnight, and Asian trading equities were lower, a little bit nervous, but we're back to almost unchanged. So, you know, let's see how that goes. But there clearly are still quite a few risks with the markets. I was reading
the biggest of which is getting a vaccine, actually.
Yeah.
No, I'm not kidding. I'm very serious about it.
Yeah, I'm not going to be first to get it, that's for sure. I was reading was it United Airlines who are saying they're seeing a significant drop in online bookings.
Who would have expected that?
Well, yeah, you know, the market always likes to assume that the hockey stick recovery. Always, there's no hiccup anywhere. But you know, I agree. I think in the long run, obviously things are going to get better. But I just think too many questions at the moment, too many potential dangers for markets to be near all-time highs. So,
Steve, why are you worried about the vaccine?
No, I mean the markets are worried about the vaccine.
Oh, okay. Would you,
because
if it was available today, would you take it? Would you get it?
No.
Why?
No. Because I'm very low risk part of the population. I don't have any underlying issues. I'm 40 years old. So I'm pretty sure that there will be a higher chance for the vaccine to give me bigger side effects than the disease itself.
Okay.
I think it depends on your circumstances. You know, I have
of course.
I have my parents in the same house who are obviously a lot older, but we are basically locked down. So I'd rather be in lockdown for 3 more months and see how things go than be the first to get it. But anyway, I think it's a personal choice and depends on your circumstances.
Of course,
so.
of course. I mean, if I was old,
how about if you were me? What should I do?
If I were you, I'd move to Greece. You come stay with us, lock down for 3 months, and then we see.
That's a great idea, actually.
Yep.
But you guys wouldn't take me, but no Americans still, right?
I don't know, actually. I don't know.
Yeah, I think it still is that way. Maybe.
Don't worry, we're going to keep you locked down in the basement for a couple of weeks.
I'm used to that. I was married.
Anyway, yeah. So otherwise, it's been relatively quiet. We had the huge Australian employment print. We're expecting small negative, and it came in plus nearly 180,000. That was a big print, but the Aussie just didn't do anything. So it just shows you economic data used to be, you know, the number one thing that we were all looking at. Now it's
logically speaking. I mean, that made sense.
Now it's less relevant because we have so many question marks. Like we said, you know, it's a headline can move, you know, the Aussie and the dollar and risk assets massively, while an actual number, you know, like unemployment or employment in this case, isn't. So
it's because we've talked about it. The markets currently are moving based on, you know, one reason mostly, and that's extremely loose monetary policy and stimulus and expectations of a lot of fiscal stimulus as well, which of course is going to come from more monetary policy because nobody wants to buy these bonds. I mean, you know, they're going to be immediately monetized by central banks. So, you know, as long as the market is looking forward to you know, stimulus and more stimulus and more stimulus, they don't care about economic data. That's why I believe it's extremely likely that once we start seeing, you know, the light in the tunnel, the markets are going to start getting really worried that, you know, the stimulus, at least the pace of stimulus is going to decrease. And, you know, we might have a day of reckoning then. But until that happens, I think the markets are just, you know, moving in one direction. And I don't consider it, you know, a coincidence that now that we get closer to perhaps that day, the markets start getting a little bit jittery. Although I don't think we've seen anything like a reversal or whatever.
Yeah, I think if you overlay the chart of you know, the Federal Reserve balance sheet and indices, equity indices, there's a very good correlation. But
yes, that's why I think we're going to explode higher, because don't forget we have a lot of fiscal stimulus coming, and that will all have to be monetized. So I was saying, as I was saying the other day, I expect that within the next few months, the Fed's balance sheet is going to jump from, I think it's somewhere at 7.1, 7.2 trillion at the moment. I think it's going to jump to 10 within,
incredible,
you know, within a few days after we get the new stimulus getting signed.
Incredible numbers. And the last thing, market-wise, for people who follow the Turkish lira, they hiked, what was it, 475 basis points, which is basically they're trying to control the steep losses that the lira has been having.
That's the way to do it. And to be honest, we're breaking through a bear flag. I talked about that the other day. I said that there are two levels of resistance that we should see the USD Turkish lira turn lower. The first one was at 780. The second one was here at 797, 798. We got rejected from the first one. Textbook consolidation after a sharp move lower. Next stop, I think, is a very key level at 720 something. Let's say 723.
Indeed, yes. And DJ's, I think, has been short, right? And looking for 725. Well done on that.
Yeah, I think we're going to go there.
Yep. Okay, that's about it from me. So you have 10 minutes to show whatever else you need to show.
Okay, perfect. So you already mentioned, Stelio, that we're seeing a rather sharp move lower in gold and silver. Now, from a technical perspective, that changes absolutely nothing. Gold still consolidating within this triangle. Same thing with silver, just a symmetrical triangle in this case. Support areas, $23 for silver and $18.25 for gold. So, nothing really that changes fundamentally. As I've said, getting lower prices is going to be a gift. So, let's see if we can actually hit the bids at these levels, because be sure about it, there are bids waiting to be hit at these levels. There's no question about it. Now, another thing I mentioned yesterday is that from a risk reward perspective, cable looked very nice to the short side. Once again, got rejected from the exact same area this channel is holding. So, just wanted to mention this because it seems to be working out in the short term. Nothing has significantly changed since yesterday. Yes, we did have towards the end of the day risk souring, and of course that pulled with it the rest of the risk assets, even commodity currencies. Of course, here's the Aussie, here's the Kiwi. In the short term chart, like the 4-hour chart, quite an interesting formation here. Is this an ascending wedge? Might be. We need to wait a little bit and see what's going to happen today. So
let's look.
RSI divergence as well, as you see here, Dale. So I do think that we might see a little bit more weakness first, but keep in mind that if we go on the 4-hour chart, both on the S&P and the DAX, for example, if you want to have the major European index as well, you'll see that despite the pullback, a very clear possible interpretation is that these are triangles, right?
Yeah.
Here's the DAX, here's the S&P. So I have to say that, you should taper your expectations having to do with more downside, because, we haven't even broken down in the short-term charts yet. Right. We have support here at 335, let's say 30 in the case of the S&P, and in the case of the DAX, it's just below 13.
All right, look how much uglier NASDAQ looks compared to DAX. And
yes.
Yeah, and I think that's because the dollar's been soft.
Keep in mind, though, Dale, that in the a little bit bigger picture in the NASDAQ is also a triangle, right? You can see it here. So in the very short term, it looks like we're breaking down from this corrective rebound, and it looks like we might want to get another leg lower, but all that is still going to be within the context of a triangle.
Yeah, I'll take
at the top of the trend.
I'll take 11,500.
We might easily move towards 11,100 to this trend line support. Yeah, I totally agree with you.
See on the weekly 10,000 as being possible.
I think we have to be very, very careful with downside expectations. I've already explained the reason. There's a lot more stimulus coming. Of course, nobody says that we can't move somewhat lower until we get that. But I think
that's how we get that. So the Fed charges in while that's going on in December with their next move, and possibly even Congress in a lame duck.
I don't think it's easy. It's really easy for the Fed to move until they pass the fiscal stimulus deal, because the Fed knows that it will immediately need to move once they do that, because these bonds need to be bought by somebody, and guess who's that somebody going to be?
Yeah, that's true.
If you unleash another minimum 2 trillion that the deal is going to be, right?
Yeah.
Of bonds within a matter of weeks in the market, who's going to absorb that supply?
Yeah.
All of it, the Fed, trust me about it. And if not all of it, like, I don't know, 80, 90% of it. So the Fed is waiting. Is waiting for Congress, in essence. Now, having to do with crude oil, despite having seen this move lower, crude oil is, unfazed, completely unfazed.
Yeah.
Anyway, look at it. I think that in the short term we might, continue consolidating or pull back a little bit, but I think that crude is eventually going to break higher, right? Natural gas approaching this horizontal support resistance area and testing the channels trend line support once again. So an interesting level here for natural gas. I'm paying close attention to it. By the way, who do we have today, Dale? Dale. Another thing I wanted to show is platinum. Despite what's happening and the pullback in gold and silver, look at platinum here. Platinum is actually attempting to break higher. And that's quite an important move, in my opinion. Keep in mind that platinum is extremely depressed, having to do with prices, right? It's been battered down during the past several years, and it's showing again some signs of life. And I find it very interesting that, despite the rest of the metals being under pressure, it wants to break higher. So this is another thing I'm paying attention to. Palladium, consolidation after a sharp move lower. I think there is a chance that we're going to get resolved to the downside in the very short term, right? Something like that. So paying attention to that as well. Let me go through some of your questions because we have very few minutes. So let's see. Both Moderna shot and Pfizer BioNTech candidate are so-called mRNA vaccines, a brand new technology. They aren't made with the coronavirus itself, meaning there's no chance anyone could catch it from the shots. Instead, the vaccine contains a piece of genetic code that trains the immune system to recognize the spike protein. Yes. On the other hand, I've heard, this is obviously cloned mRNA, right? You can't get millions and millions of doses of mRNA, from original sources. So there's a lot of discussion about, what cloned mRNA can actually do to your body, having to do with mutations or whatever. There's some debate about it. So it opens up other, Dimitri, other, questions having to do with potential side effects. So yes, you're right about that, but that doesn't mean that it's going to be safe on, on all respects. Time will tell, as always. That's why, under normal circumstances, vaccines go under very vigorous and long-term tests, which in this case, we don't have the ability to do, right?
Yeah. Steve, you want to look at someone's asking for euro pound, and then
absolutely,
and
euro
then
pound still.
It held where it had to.
Yeah, euro pound still consolidating here. I think that it really wants to eventually break higher.
Yeah,
but
me too.
Instead of jumping the gun, we have this beautiful channel.
Wait for 90.
Yeah, wait for what is it, 90, 20,
30?
20, 30 to break out. Once that happens, I think that we're on our way to 93, 94 cents.
Yeah.
I think that's going to be a nice trade, but we clearly need to remain a little bit more patient here, right? Now, since we are at it, still paying close attention to Euro Aussie. Look at it, scraping the bottom here at this ascending channel, slightly ascending channel. Looks like eventually it wants to break lower, but that doesn't mean that it has to happen from here, right? I mean, we might again see a rebound within this channel before we eventually break lower. And here is Euro Kiwi testing the previous lows. Looks more bearish in the short term than the Euro Aussie, but in any case, I think it also wants to move to the downside. Is your guest here?
Yes.
Okay, perfect. Enjoy the interview.
All right, Steve. Thank you very much, Steve Volge. Nargis, welcome back. Hi, Nargis. Welcome back to Face. How are you?
She still
Calling
needs
double.
to unmute.
Yeah. Calling
Hi,
double.
good morning, Dale.
Good morning, 007.
Morning. How are you?
Okay. Nice to hear your voice, Nargis. How's it going with you?
Doing good, actually. Yeah. It's
Okay.
getting cold in the Bay Area, cold and rainy, actually.
Oh, yeah. Yeah. A lot of people leaving San Francisco. A lot of people leaving California. Have you noticed that it's quieter in San Francisco?
Yes, that's what I heard, that it's like a ghost town. Nobody's out there on the streets and nothing. I think it's gotten affected a lot. Yeah. Most people were mostly like weekly or daily earners, other than the corporations, of course. But, you know,
right.
Economy gets affected. So like this, people need to earn.
Yeah, we're fortunate we could, unless they're all learning how to trade now. Do you want to share your screen?
Yes, I'll do that.
Okay.
Desktop. This one, right? Huh?
Yeah,
this one, right?
I don't see anything yet. Here it goes. There you go. Okay.
Do you see this ES 2-hour chart? Or
yes, I do.
Okay, good. Then the right screen.
Okay, and yeah, and there's that megaphone, famous megaphone. So yesterday was kind of, I think, an important day if we get follow through. And I'm wondering what you're thinking. Do we need to close back inside this megaphone to activate the formation?
Yes, actually, Dale, it does look like this because so far it is holding this top line. And the way I look at the things I look at it is, you know, this ES, this one single candle went like more than 100 points, right? That night when that vaccine thing they got too much extended, overbought and everything. ES didn't had any more space to go up. So the natural reaction was to come down. It went back, retested, but did not take out the high or went near it as well. It did some 80% retracement and it's down. So what was happening before this candle even came in was XPX was already extended. You know, so when I say that price need to recycle, that means everything needs to come down to 55 EMA sooner or later, especially the smaller time frames, right? But that on the RTH sessions, XPXY had not happened. So currently that's happening now. With ES leading in the sense because it trades 24 hours. So that has more faster movement than the RTH sessions. So I mean SPY and XPX. So this came on support at 4 hour, and since then it is holding that 53 area. 53, 54. So if we hold that, then it's possible we may go again up for a retest somewhere around late 3500s, 94, 95, 3601.
Okay.
And then if this has more downside, then that would be that area should be a failure area for it to come down.
Okay. Yeah. So
or if 35.15 this area here somewhere here gets violated and we close weekly below this, then we know, okay, we have further more downside. But as far as as last time I had talked, 32.49 is the price cycle breakout because it completed those 10 cycles. So as long as we are above that, this still has bullishness to push up towards that 38.45. This number, it almost did 3700, right? It did 36.68 less. So almost. I mean, 4 points less, but yeah. So what I was seeing here, something which you see, I drew this. is from here to here, I just projected 100%. From here to here is, I think it's somewhere 1,200 points.
Okay.
Yeah, some 1,200. Yeah, some 1,200 points. So this gives that 4,500 target.
Okay.
So earlier we were talking that, you know, the original target is 4,500 or 44. I had 4,489, approximately 4,500.
Yeah.
So yeah. So, and you also mentioned that a lot of folks in the market are projecting 4,500. So
yeah,
this downside projects 4,500 as well, 100% of this.
Okay, so here's my narrative. I think we're going there, but I think we could have a 15 to 20% washout, shakeout before that. So I'm curious where you have your red lines, those two red lines, where they come in, and that moving average, 3,200-ish.
This is 55 EMA. So both times XPX, you know, bounced off 21 day. And this has cashed up a little bit too, and it's getting towards that 21 day. So if it has to fall, then it earlier I was saying that, you know, this 37 was my price cycle number, and I wanted it to come down to there because that would relieve a lot of pressure of, you know, this back and forth. There was no clean movements, right? So, but it did not come. It was, you know, 32.49. It held the price cycle the last fall when it fell down. So I'm thinking now this is catching up to that 31.37 area a little bit more. Now it is 31.90. So this kind of is making a confluence. So I don't know if this comes down. So we'll know if this 34.32 or 32.49 area, right? This green line is held or not. If it is not, then we know this is coming down on a weekly basis. It closes below this, then it flushes right down to here.
Right. Where's that bottom, the next line underneath it come in?
This one?
900. Yeah.
This one? Yeah. 20, somewhere 29-ish. Yeah, below 3,000.
Is that an important line to you? Because that
this is just I've joined the lows here. Yeah. So I'm assuming that you know, if at the first cut, price should find support if it wants, or at least like a bounce. So getting oversold on daily or something. So kind of comes here, bounce it, come down, bounces, come down, bounces.
Right. Okay.
Yeah. So like a staircase. But you know, these things, if it starts to fall, it'll do just one big candle. You know, the way these things are going down, one big candle and you're done. 200 points and or 100 points up. So you can't say that. That would be a natural movement, you know, as it used to happen in the good old days. But there are no more good old days.
Yeah, they're good. We'll look at.
Do you feel?
I know what I'm worried about. That we'll look back at these days being in lockdown as the good old days. Anyway, so that's a megaphone.
Yeah.
And okay, there's NASDAQ. So
yeah, so NASDAQ, same 100% projection. It come to 12,700-ish. This almost did that. This was 12,400 something, less of 250, 300 points. So this almost did that 100%. Then now if it wants to fire, so I don't know if it wants to do actually this and touch this, but it's possible that that's why this QQs have been lagging a lot. Because because you know, it is also at a price. You know, surprisingly, all of these things are at some price cycle confluence. The XPX, I mean the ES, the NQ. The interesting thing is, this thing is always the GOAT. You know, it's I found this YM always gives the better indication of what's happening. So this guy just completed is, okay, hold on, I'll show you. YM. So see, I said that 30,277 will complete its price cycle 40 cycles, right? So it,
Right.
it touched 30,000 exactly. I think not a penny more or penny less.
Yeah, big round number.
A big
Yeah,
round
and
number.
that was a
Yes.
nice projection. Can
Yeah.
I ask you, you know, we were, first we looked at S&Ps, which made new highs on the Pfizer news. And NASDAQ did not. It missed it by just a shade, makes it look like a double top. That hasn't happened in a while. Normally NASDAQ was leading it. Do you make anything out of the fact that S&P has made new highs, Dow has made new highs, and really what led this whole advance from the COVID crash were NASDAQ stocks? Is that kind of the canary in the coal mine right here? Is that NASDAQ, which led to the upside, could be the thing that leads to the downside?
That's possible, Dale. Look at it. Yeah. It's very extended, right?
Yeah.
See, 10 SMA is right here. And so what I was saying is the comment which I had made here, oops, sorry, is, you know, all techs are very, so all techs, if you see Amazon, Apple, Apple has not done anything. Amazon hasn't done anything. It's just ranging between, I mean, Apple is 2 to 5 points and Amazon is between 200 points. It is ranging. Netflix hasn't done anything.
Google's the only one that made a new high.
Yes, Google went to its cycle 1800.
Okay.
Yeah, so it completed its.
So all of your upside calls from the last time we talked,
yeah,
they all hit.
They almost hit. Amazon is lagging because it is following the ES path. So what I'm doing is I'm just following. If Amazon leads, then ES follows because they are on the same number path. So that also has a 4,500 price cycle. This one also has it. So I'm assuming both of them are just, you know, tagging each other. So in this case, Amazon is leading in its movement. So if it falls down, ES follows, or if it is going up, then, you know, this one also does. So all these charts like Amazon, Apple, they're all like this. You know, the monthly is just simply ranging here. It's possible that it's waiting for this 10-day to catch up a little bit more because this distance had increased a lot.
Yeah,
and on a monthly
Amazon
basis,
looks going to look very negative under 2,900.
Yeah. Oh, yeah, definitely. See, it breaks this.
Yeah.
This is this is 29.6. Yeah, under 3,000.
Yeah, right in there. Yeah.
Right under this, it's it'll fall to 2750. That was my original target. That if it comes down to 2750, I would probably buy it, depending on the momentum, how it's happening in those few days. I would, you know, this would be a good. Unless it breaks this and, you know, wants to go a little bit further, then 2,500 would be my good price to buy.
That's what I'm looking for.
Okay.
That would be my, you know, I would, you know, not to use a pun, I would bring in the shopping cart. You shop online with them. So I'd have my mouse clicking away. So
yeah.
All right. So you know, we're kind of in agreement. I just think that the NASDAQ and the FANG and MAGA stocks, and, you know, I've been tweeting it for a while, and we almost broke down, and we had another pop on the Pfizer news, and we're eroding again. Microsoft as well, you know.
This hasn't gone to the spa day in a long time.
Yeah.
It has to go some little bit, right? But even then, I think it'll just 200-ish or so, or maybe just little under that. 185, one somewhere, it may bounce back and probably make a new high. I feel it because it has some pending cycle to 250 to 300. It depends because it has never broken this 10-day at all on the monthly basis. So this parabola has been very, very strong. Same goes with
you have parabolics on that chart. Do you use them at all? I used to have them on my charts.
Yes, I do.
What do you use them for? You know, I used to use them for where a market might be able to go to, like kind of a target. How do you use them?
I use mostly as an indication to see how much pressure there is. in terms of this, because what I see is, especially on monthly, when the stock is coming under a lot of pressure, like, you know, everything is like bloated, then, you know, at those times, RSI also gets very high, you know.
Right.
So see, like this. So, and the parabola goes up, then you know that the daily may be, you know, squeezing a little bit to attract or trap more people. And you can go and find some short opportunities.
Okay. Okay. Jane is telling us that she uses PSAR can be used for reversals under different time frames. See, everyone, one tool could be used for multiple purposes. It's interesting.
Yes. Mostly these are indications to see that, you know, a stock is, and I, for whatever stocks I look at, markets, anything, monthly, weekly, and then multiple time frames on 30 minutes, 4 hours, 2 hours, daily. So you know where the alignment is coming from, and you know why it is doing that movement. Basically, it gives an explanation of what to be expected, or you know, why it is doing that. So the price which is coming just before this fall, I was talking to a few of the people who closely follow me in the room, is you know, that whatever Wednesday high we get, we may get a good short opportunity because XPX and SPY hasn't got an opportunity to relax. Right. So that 4 hour chart may bring everything down. And then but unfortunately, Wednesday, there was no new high. It did not take out the 23.5 or 37, and it just came down. So that is there. So, so these charts like this, they you know, like this is SC, some stock C Limited.
What does it do? What does this company do? And was that an IPO?
I have no clue what these folks do, Dale. I just brought up the chart because somebody asked me, people, you know, how on Twitter it is, everyone wants to buy, you know, that FOMO thing is going on, and everyone wants to buy this and all. So these people had earnings, I think, a couple of days ago. So I had tweeted about it. I tweeted, from this $10 to 187. So 200 was its price, 200 to 225 was its price cycle, and this would be an undercut 25%. So I said it is already reaching that price cycle. So I personally wouldn't buy this. In fact, I would, after the earnings, I would look to short it, whatever target it reaches to. But it didn't take out this high also, and it came down from 187. I think it did 180 high just before the earning. And look at the RSI. This is where the Bitcoin tanked. The previous 19,000. So
interesting. Okay.
This was 96 plus.
I see you have gold up there. You have a view?
Yeah.
You have gold on top?
Yes.
Because we are correcting, and I'm wondering what you...
Gold, yes. So gold, GC, where is my GC? Yeah. So we had a target of 2117. It just, so this is, this price cycle was done because it, you know, it was short of 20-25 points or 30 points maybe. So that's very well within that 25% cut. So here it honored it very well, and currently it is very extended. I felt, see, again, this was here and the 10 days here. So I think 1800-ish, 1800 would give it a bounce if it doesn't break down. So I'm looking for it to go somewhere around 1800. Best I would want it is somewhere here, 17, late 17s. But I think this 1800 may hold. And then this will also like kind of a bull flag or so. And if it wants to fire high, then we have the higher targets back to 2200 to 2705. It will all depend on, you know, if it is trading above this 10-day on a monthly basis or not.
Okay, someone, Forex Gal, is asking if you're following XLF, the banks.
Yeah, XLF, yes. XLF, you remember, Dale, last time, where are you? Oh, this doesn't go up. Why doesn't this go up? You are, your screen is, hello, how to remove this one?
What, that I am viewing your screen? Do you need to stop a share? You could
I can drag this.
new
Oh,
share.
sorry. Yeah, sorry. No, your that Zoom, the Zoom bar was coming on top, so I couldn't see the tag. So XLF, right? So
yeah,
I had mentioned that it hit 31, and that was a resistance, and it pulled back right from there. Now it needs to trade above 31, so it has a short to 65.
Okay.
I
like the way you really organize everything in text along with
otherwise, because I deal in numbers, and then when you're talking, I would forget, right? Which number belongs to which.
Right. I ask people to remind me what I said.
Yeah. And then it gives me a reference also if I have to go back and check, right? So see this? This is very bullish for financials because it is not only this is a trend reversal in my opinion, because it is monthly is, so this is November, right? So if this closes like this above 25, then the train will shoot off. Of course, for daily, I would want it to retest back to, somewhere here. 25, and maybe fill the gap, get it cleaned up. And then November closes above 25, and this fires off to, back to these highs and probably higher. So above 31 or 33, this should have a short to 65, in my opinion.
Wow, that's going to mean sharply higher yields, I think, higher rates.
Higher rates, yes, possibly.
Okay. Anything else you want to cover?
So so one of the things was this Zoom, right?
Okay, Zoom,
yeah. So this Zoom thing, this oh no, not this one. Why did it, what is this?
She's really funny.
Those are ads, huh?
Yeah.
August 17, October 18, October 21. Okay. So this one I had projected, so this was when 200, under 200, I had projected the cycle for 400, that this should hit 400, and it did. And since then it has been, but it did exceed its numbers. And it was here, I think, ZM.
Yeah, there you go.
Yeah. So
what a nice 3 drive to a top there.
Yeah.
See those 3 move? Yeah. That's, that's the only technique I know.
Yes, that's one of the if you can just do that, Dale, on the opposite side as well, you have some very good setups all the time, time.
Yeah.
Even on small time frames.
Yeah.
So
works
it
on
doesn't,
all of them.
All of them. So this, so I'm looking that if this ABC works, then we may head up back to retest here. And if it exceeds the high, then this has some higher targets pending. Where did ZM go? Not yours, mine, sorry. So it needs above 421 to trade consistently to hit this higher target 677. The only one thing which I've been noticing is that when ZM is up, the markets are down. So they are acting in reverse. So I'm also using that as an indicator to see where what's happening. So 2 days ago, we took a trade in Zoom to go long. So what that was indicating was that markets are almost, so that confluence hit ES was under pressure and ZM was under pressure. Both were under pressure to act, and they did yesterday. I think just at the end, it flew to 425 or something. And this thing came down. So so that's another good indicator to watch for now, because of this virus thing. Zoom is the only God company where it will be the savior of the work from home thing.
Right. Well, it's been an amazing thing. Nargis, great presentation. I respect your work, and that, you know, what I said in the promo tweet was, you know, how I see you as a very hardworking, dedicated tactician.
Thank you.
And looks like you're, you know, helping some others along the road, and you know, you're planting great seeds, and always appreciate you coming in and sharing your views and edifying the FACE community. So thank you very much, 007.
Thank you.
You know,
Thank
for
you very
coming,
much, Dale.
you know, coming out of your covert hiding place and going public. You know, a lot of secret agents don't do that. So we all appreciate you here in our community. Thank you very much, Nargis.
Thank you, Dale, and you have a great day. All of the team members of Forex, thank you for having me, and it's always a pleasure talking to you guys.
Yeah, and you could follow Nargis at Nargis007. And if you want more of her, I guess she's, you know, has a place where you could collaborate with her directly. So she's a follow for sure. That's Nargis007. And remember, everyone, don't just count your pips, count your blessings, and stay healthy. It sounds like you have a little bit of a cold, and that you and your family remain untouched until we get through this time of testing.
Yeah, thank you, Dale. Thank you, and good health to you as well, and everyone else out there. Thanks for the follow and encouragement.
All right. Thank you very much.
Thank you.
There's Nargis, one of the hardest working, dedicated tacticians I know. And that's a wrap for us today, everyone. We'll see you tomorrow for TGIF. Good hunting. And thank you for hanging out with us. See you, Nargis.
Bye, Dale.
All right. That's a wrap. Adios, everyone. You're very welcome, Hugo, Laura, Tom, Jorge. See you tomorrow.